We're waiting today's Fed decision. Joining us now, Emily Roland, co-chief investment strategist at Hancock Investment Management. And there's a lot of Christmas analogies around. I like yours because inflation, you're likening it to the Grinch who might steal Christmas. And we talk about it every day after last week. And with a Fed cut imminent, I think it's justifiable to talk about it, Emily.
Yeah, absolutely, Joe. We do expect a hawkish cut today. So the bond market is in the driver's seat right now. They're telling the Fed they need to cut. There's a 96% probability of that priced in, but the Fed probably signals fewer cuts from here. The September summary of economic projections, they had 4 cuts penciled in. For next year, it's probably something more like 3, given the improvement that we've seen not only in labor market dynamics, but this reacceleration in economic growth. Of course, the risk is that the economy overheats, and there's no doubt about it. The services side is too hot. We just saw the biggest divergence in services PMIs versus manufacturing ones ever. The consumer's resilient, and part of that's because there's been a massive wealth effect. The S&P 500 is about to notch its best 2-year streak since the 1990s. I know it's not as great as a superlative as going back to the 70s, but it's been 30 years since we've seen such great returns, and that's really stoking animal spirits, causing the consumer to be resilient. And we saw that in the CPI and PPI numbers last week, which were certainly too warm for comfort. So we think the Fed can't get overly complacent on inflation here, and we'll look for language from Powell in the press conference to address that.
Anything can be rationalized, and I guess in this case, we talk about whether we're in restrictive territory or not, because a lot of the things you were just saying, to me, if I was running the Fed, it would at least make me think twice about things. So you say the economy is at risk of overheating. Does that seem like a time you should be in a cutting They tried very hard to get that, they stayed at zero for a long time. A lot of pain and a lot of, angst to get 500 basis points of tightening. Why give it back when you don't need to? You built up that dry powder. Is it because it's restrictive? You could make another mistake. Yeah. Staying at zero was a mistake. You could make a mistake on the other side by going back down before inflation is put to bed.
Yeah, I mean, I think the Fed's justification is that the current Fed funds rate is too restrictive given the level of inflation having come down. But we agree.
Where do we see that, Emily? Where do we see the effects of the restrictive? Where is that?
You're right. And that's the biggest challenge right now. It's so hard to justify a cut in our view. You look at some of the speculation that's been building across markets. Right now, there's a made up meme coin. I want to say the name of it, but it's not very ladylike, that now has a market cap bigger than 40% of S&P 500 companies. You're seeing massive options buying across high flying stocks. You're seeing market breadth absolutely terrible with value stocks underperforming and the average stock underperforming is the speculative frenzy's been building. So it's a very unusual time to be considering cuts right now. And we agree that the Fed might want to save some of that ammunition for when they need it. Things are good right now. We're not even at the hard part of this cycle right now. So I think what the Fed is doing is they're listening to the bond market. We are in this unusual dynamic where, you look back to September, a 50 basis point rate cut wasn't really being thought of until journalists wrote about it. And then the Fed was prompted to do it. So I think that's where we're seeing this action going. But the Fed's got to be pretty forthcoming, signaling that in 2025, they're going to be mindful of these building inflationary pressures.
I think fart coin is okay for
I didn't want to
cable.
say it.
I know you don't. I'll say it. I don't need to be ladylike, but I think it's okay for cable. But you can't say, because it's a member of a group of coins that you can't say, the S coins, right? But I think you can say fart coin. But what bothers me about reading your notes, Emily, is you saw in the inflation number that it was a broader breadth of it. It wasn't just warmer, but it covered more ground and is more troublesome, isn't it?
Yeah, for a while it was like Groundhog Day, where it was just shelter inflation that was driving about 60% of the month over month increase in core CPI. And actually, we had great news this past month where shelter came back down to 0.3%. So we're seeing some downward movement in housing prices. The problem was that everything else went up. Things like airfares and hotels and used vehicles. We saw price increases in all of those areas. So I think, inflation again is seeing this sort of mini reacceleration that's also been prompted by the new kind of political realities or even, potential political actions that are sort of prompting this pro-cyclical idea that we could see better policy in the United States, potentially lower taxes, and other potential policies under the Trump administration that would be inflationary. So I think there's a kind of mix right now that's not great heading into the new year because inflation tends to pick up in January anyway due to seasonal factors, things like insurance companies raising premiums to start the new year. So this is not a great way to end the year here. A little too warm here for the comfort and joy that we might want as we head into
Right.
the holiday season.